Has this ever happened to you? You get in a trade and you're like, oh great, I'm going long. This is it. We've hit the bottom. It's going up, and man, that's it. There's confirmation there. Oh, there's some more. Then boom, you're up, and next thing you're tanking. There's a reason why this happens. This happens to all of us at one point or another in our trading career. Is we don't set up the proper resistance and support levels, and today that's what we're going to be looking at, so stay tuned. But what I want to do today is I want to show you how to set up your resistance and your support lines, which are very important, because even if no matter what system you're using, you're going to need to know these levels and know exactly where they're at, so you can know when to get in and when to get out. Like for me, I use the Strat method with Rob Smith. You check out his videos on his channel, Rob Smith in the Black. But even in that, it's when I first got started, I wasn't using these support lines and levels, and I was getting burned. I was like, what's happening here? I don't understand what's going on. But anyway, let's get right into this thing here. So what I do is I get my monthly. I got the monthly, so I see the big picture. And if you're wondering what these green boxes and this red box is here, these are years, okay? This is 1 year. Each box represents a year. This gives me an idea of what's happening with the stock. This is NVIDIA. This is this year, or actually this was 22, 21, and then 20. So you'll see like a 2 to the up, 2 to the up, and then a 2 to the down because it started going down. And then this year so far, it's an inside year. This is what we call an inside year because it has not broke the previous year's high or the previous year's low. So expect some choppiness. Hopefully we can break out of it one way or the other this year and really get some volatility and be able to make some money. But going back to what we're discussing today, we need to sit here and really look at this on the monthly level. And this is where we start to put our lines in, and support lines and resistance lines. So a lot of people use the Fibonacci, and that's fine, whatever works for you. But if you're looking at price action, which is the best way to go, is you need to set these things up so you don't get burned and get in at the wrong time. But so what we're seeing is what happened here, what's going on, and if it does break above, being a 2 break to the top of this previous month's candle, where are we going to put our stops? Where are we looking at? What's our target? So always look left. Left is history. Left shows us everything. So we look this way over here, and we look at the last time we had a high, and where there's kind of like an area of resistance or support, and we look like there was one right here, but we're beyond that. But it's okay. We can still put that in, and we can still put that in here as a possible level. And we can keep going up. Here looks like another one here. You see where these two candles kind of had a support and resistance line. We can put one there. Okay, where these two candles met that 1 month, we can put that there. That can be a support level as well. We'll just go here to the most recent. We will put one right here at the most recent candle, historically speaking. Okay, so that's what that looks like on the monthly. Okay, let's see what happens if this thing's gonna go short, or if the price is gonna fall. What are we looking at here? I see in this area here, these two candles, this was a resistance and this was a support. A level here, and then we got one here kind of like in the same ballpark. So let's just go ahead and we just put one right here. All right, and then just keep going down the line. I mean, there could be one little one right here, but we can do that on a shorter time frame. And we'll put one here, so you kind of get the idea of what I'm doing here. Okay, there's another level here, and you just drop them in. Okay, where you see these areas of historical prices that were actually support and resistance, this is where you need to put these things. It's a lot tighter here. I mean, you can continue to do this all the way down. I mean, there looks like a possibility right here where this was actually resistance, historically speaking. and you can drop a line there and just keep on going down. Okay, we go down to the daily. I mean, you can go all the way down as far as you want, but see what we set up in the monthly? We start to see that these were key levels. Like this area was a level of resistance and it became support. Then this one was resistance and it became support. And then same thing over and over. We see it. So even setting this thing up on the monthly, you can still get yourself some good definitions here and define key areas. Setting it up, like I said, look at big picture, go back to the month, weekly, daily, set them up, and then when you're going down to what you're comfortable with, that time frame that you're trading, 5, 10, 15, 30, whatever it might be, set it up into that micro level. That way you'll get a clearer, cleaner picture of what's happening, and you won't get caught with your pants down holding a bag or something really bad, like not knowing when to get out or when to get in, and then you're just throwing money away.